Weekly trades with precision, gold, silver, and commodity setups broken down with full transparency, wins and losses included. This is the Golden Nugget with Verified Investing.
Welcome to another episode of the Golden Nugget that airs at 12:30 Eastern Standard Time every single Wednesday on not only the legendary Verified Investing YouTube channel, but the Drew Wolfer YouTube channel, the Verified Investing Twitter, the Drew Wolfer Twitter, wherever it is that you're watching from. We appreciate you because we would not have a platform without you. Obviously, you're probably here because you saw the title, the thumbnail. Yes, I do have a price prediction of $66 or so on silver, and the parabolic nature of the metals markets continues because I'm thinking gold is probably going to go to about $5,000 as well. And I'm going to give you all the reasoning and basis behind that. I'm going to give you the TA and I'm going to give you the set parameters that could potentially be the springboard that makes both of these things happen inside of the gold and silver markets. So let's just get straight into it. If you are here for the first time, this is the Golden Nugget. I am Drew Wolfer. I'm a verified pro trader, your golden guide to everything that's happening inside of the metals markets and the broader financial markets. Now, the first thing we are going to do inside of this episode is we are going to do the commodity compass and tell you everything that is happening inside of the commodities markets and obviously the broader financial markets, because we know that all of these markets are dependent upon each other and move in unison. Then we will talk about the economic calendar, and then we will do the Golden Nugget. And the Golden Nugget is something that I bring to you from a nice little nugget out of the Golden Opportunity, which is a training that I brought out in conjunction with Verified Investing that we actually just ran a very successful sale on last week. So if any of you were one of the people that got in, drop it in the comment section and let me know. We have some good trades that are on right now. We're up massively on some gold trades that we took last week. So if you're in those trades, again, drop it in the comment section. Then we will do, because we know what people come here for, right? They come for the braids, but they stay for the trades. We will do the silver snapshot where we do TA on silver, and we will do the gauging gold segment where we do TA on gold. And then we will answer a couple of the viewer questions at the very end of this episode. And if you have any questions or any comments, drop them in the comment section and maybe your question will be answered next week. So let's get into our very first segment. This is called the Commodity Compass, and we are going to talk about what is driving gold right now. So first and foremost, we saw a nice little pump. The pump is real, right? The pump is real. ADP data, it came in and shocked the markets, okay? And it helps, in my opinion, this is going to help bolster the likelihood of a Fed rate cut in December. That's coming up next week. We know that next week is Fed week, FOMC. It could get wild. So ADP came in at negative 32,000 jobs. So 32,000 jobs lost, okay? Whereas the last reports showed a 47,000 job gain, okay? So we went down quite substantially because the median forecast for this one was 40K jobs added. And so we took out 32,000 jobs. That was a massive miss. Now we have an over 80% chance of a Fed rate cut next Wednesday. Okay, this is insane. Having that high of a percentage of a rate cut, it's pretty crazy, okay? Now, that is going to be happening next Wednesday at 2 p.m., so that'll be right after you see me next Wednesday. This could be one of those catalysts that sends, at least in the interim, silver up to, $62 plus. We'll give you the TA on that. And then gold to new all-time highs, and we'll give you the TA on that inside of the gauging gold segment. Now, there is a silver supply crunch, and that is why this bad boy is pumping so absolutely hard, because there is a silver supply crunch and supply and demand imbalance, okay? That's the key driver of this run, okay? There's tight physical supplies colliding with rising investment and industrial demand, which is bolstering a serious floor for silver. And inside of smart money commodities, spoiler alert, we just took a 15.5% gain on silver. We're in a gold position that's up about 6% right now, and we still have a silver position that's up 20% right now. So if you're not in smart money commodities, maybe now's the time to start thinking about getting in there, because I'm giving out, a lot of calls inside of there, not just on silver and gold, but all of these other commodities, right? Now, Ole Hansen of Saxo Bank actually highlights that silver's current pricing is reflecting the tangible reality of physical scarcity rather than just speculation, which is what people a lot think just drives this market is speculation and then safe haven demand, right? Shanghai's silver inventories have also dropped to a decade's low, okay? While US COMEX stocks or stocks of silver have actually fallen sharply as well. And we've been flying silver over to London to help them be able to keep their markets open. Now, China's silver futures curve is in backwardation, and ETFs are seeing the strongest inflows in over a month. So the supply-demand imbalance is becoming increasingly pronounced. And the last thing that I see driving the market is that President Trump also announced that he has chosen a new Federal Reserve chair, okay? Widely believed to be Kevin Hassett. This is not confirmed. We can't confirm it until somebody puts their hind end in that seat, but a move that could make it more expected to see lower interest rates. Okay, now let's get into the economic calendar and tell you what is going on at least until next week. So today we had ADP employment data, import price index, final S&P services, PMI, and ISM services. Okay, tomorrow we have initial jobless claims. This is going to be key. Friday, PCE, okay? Watch out for that core PCE and that preliminary consumer sentiment coming out on Friday. Then on Monday, we have on Tuesday, we have NFIB optimism and job openings, which I don't think these are that big of a deal comparatively to what we're about to talk about. Wednesday, we have employment cost index, and then we have the Fed budget and the big dog, FOMC interest rate decision with an 80% chance of a rate cut of 25 basis points. That is happening on Wednesday at 2 p.m. Stay tuned for that. You can see gold and silver and every market just get really wonky on Wednesday. So obviously show up for the TA. I'll give you the trades. Now, I want to do the golden nugget, okay? And this is the importance of the breakout and retest, okay? So this is something I teach inside of the golden opportunity. So if you want to know how I have like a 90+% win rate in just 2025, get into the golden opportunity and it will be one of the first links in the description. But let's go ahead and get into our charts, okay? Let's go over here to the gold chart. And boom. So this is the importance of the breakout and retest. Okay, we've got the gold chart right here. As you can see, we came out and we took a nice trade on this as well, by the way. So this was our symmetrical triangle, right? We were just waiting for a breakout on this on the spot chart. Boom, we got our breakout, our confirmation, our perfect back test, and then blasted up. Okay, so we actually took a trade on this. We set this up in the golden nugget. Waiting for that retest is incredibly key because this used to be resistance, okay? So when we break that resistance, we have now flipped it to hopeful support. And if the support holds up, then it helps bolster our position to then use that as a support to go long on, okay? So this actually hit way back here. Give me 1 second. Boom. We actually took the retest of the parallel here, and as you can see, it bounced really well, and then obviously we gave out this trade as well, but we were already in this trade, so it didn't matter as much, but boom, you got a nice retest, and then bam, blasted up to those previous highs and actually took them out. So this was a perfect entry, perfect exit, absolutely massive move, just a great move up, and actually let me tell you how far that move up was. That move up was somewhere in the realm of about 3% in about a day. That is incredible moves inside of a market that, you know, you're not usually going to see 3% in a day inside of gold and silver. Now, let's get into the silver snapshot and let's talk about the trades that we can have going on into this coming week. Okay, now, first and foremost, we had a nice little ascending or descending triangle, and this is a bearish pattern. This is favoring downside, okay? But we broke up above it, and look at that. You back tested it, you came back up, you're back testing it again. You could get a nice pump up, at least on the spot chart, and we'll see what happens here. But let's give you the trades that we have. So obviously, this long we gave out, it was about a week ago, I believe. It was on the 24th. We gave it out on the 19th, but it hit on the 24th. Perfect entry, almost no drawdown, perfect exit. This was a 21.68 risk to reward ratio. This is something that is just an absolutely incredible trade and just beautiful moves. Okay, so let's talk about what we can do this week. Well, if we come up here to this 2.618 and we hit that $60 level with a bearish divergence and momentum falling off, you want to see your RSI being extremely overbought up here, you could take a nice short and short it right back down to the bottom or the top end of this descending triangle, or at the very, most, you could bring it down to here as well, which is the bottom end of that descending triangle. Okay, secondarily, we have the SFP and a bear div of these highs. Okay, so as you can see, there's some nice highs right here, and silver is just, for all intents and purposes, continually moving up. So if we get an SFP and a bearish divergence at these highs, you could take a short. Okay, now we're not being super heavy short-sided right now, at least until we see what happens with the FOMC next week. We're just looking for good long entries right now. If you break down below this level right here and you bearishly backtest it at about 56.57, which is the bottom end of the descending triangle, you could be shorting down to about $53.90, the prior consolidation zone, and double top little kind of resistance zone right here. Okay, then we also have, if you continue and you bearishly backtest that, you can just continue shorting, or you can enter a new short and short all the way down to about $50 from about $54 there at that 2.236 fib. Now, from the long side, okay? If we come back and we backtest this, which we're trying to right now, you could enter this long and ride it up to $60, and even further than that, I'll give you, the base case for the $66 and $62 silver once we get done with these trades. Secondarily, you come down to the bottom end of this descending triangle and you use it as support, as you've been doing here. You can take that and ride it up to the highs and then potentially up to $60, okay? Now, we also have a naked VWAP down here, okay? And if we get a naked VWAP and a 2.236 bounce, you could be longing this, and I would be longing this up to probably these highs right up here. So you're looking at a range of $53.93 to about $54.50, and that's going to be your naked VWAP and your 2.236 bounce. Secondarily, you could just redo this 2.0 fib right here, that trade that we had hit last week. Again, you come down there, you bounce, you're looking up, okay? Then you've got your obvious level down here, the 1.786 fib. You've got your 1.618 fib, which is even further down. And then you've got your 1.5 fib, which is even further down. Now, if you lose any of those levels, you're looking to short down to the next level. Just like this, as you can see, short here, down to the 1.786, right? Short here, down to the 1.618, and then short here, down to the 1.5. And if you eventually lose the 1.5, you're still continuing to short. Are we going to get that low? Not anytime soon. So, these are just trades to keep you kind of in the know. Just set your alerts on your chart and call it a day, right? So let's talk about why I think silver could go to 62 to $66. Well, we have this nice parallel, as you can see right here, and I have deviation zones on my parallel. And yes, they are proprietary. It is something that we have backtested, and only a couple of people in the world know what this is about, but this does very well in predicting where the market could go, okay? So we have actually gained the top end of that parallel, and if we can confirm a candle above a close, above about $59.50 on the futures chart, and we come down and backtest this, we could be blasting up to this first deviation zone in between about 61.50 to about $62. Now, if you get up above that, that's where you start to get into the $66 to $67 range before you could see a nice pullback. There's a couple other reasons why I'm looking at 66 as a potential pullback range, but it's something that we can get into in later videos, and it's something that I tell people inside of Smart Money Commodities, so I have to be very careful about the things that I share here and the things that I share in the paid group. So if you want all that alpha, get into Smart Money Commodities. Now, let's do gauging gold. Okay, let's talk about gold. So as you know, we got into this really nice long here where we are mildly profitable, right? But we're looking to bring this up to the all-time highs near about $4,400. And I mean, that'll be a massive move. It's already up like, I don't know, a few percent, right? As it sits right now, we're up like 2%, but we're looking for about a 6% move on this. Secondarily, we also have this, okay? Even if you didn't get this, you still had this one. This one is the one that we are wildly profitable on, and we're looking to bring this up to the all-time highs as well. This one's already up 4%, and this one's up about 8%. The one that we have inside of Smart Money Commodities, it's already up over 5%, almost 6% right now, and we're looking to take an over 10% gain on that. It's going to be insane. Okay, so let's talk about what we can do now, right? So as you know, we've broken up above the parabolic parallel, and we've broken outside of this symmetrical triangle, right? So if we come back down to the parabolic parallel and we back test it, you're just looking along here somewhere in the 41.50 to about 41.30 range. Now you've got a secondary entry here, so just be cognizant that we've got about 5 different entries right here. So you could, if you're a swing trader, you've got quite a ways down here that you can actually start averaging in. So if you come down and you back test again this symmetrical triangle's top, you could be longing there as well. Secondarily, we have a naked VWAP and a naked daily point of control down here. This is going to be a key level. If we get down here, we could catch a nice bounce, and this is where you could be riding this thing up like super duper high. Obviously, when you get into these trades, you have to manage them and understand that you're going to have resistance here, resistance here, resistance here, right? And you have to manage your trades as you see fit. Even on these, right, you're going to have resistance, resistance, and then more resistance. So just watch out and take these things into account whenever you're getting into any trades. Secondarily, we have the short of this SFP. If we SFP up here and we get a bearish divergence, you could be shorting down here until you can get your nice long fills, at least until we see what's going on with the FOMC next week. We are looking for good places to enter longs, right? Especially if we get that rate cut. That's going to help bolster a nice floor for gold and silver, for that matter. Now, if you lose that parabolic parallel and you lose this top end of the symmetrical triangle, you can start shorting again and again down here at the 2.618. If you lose that and you lose this naked daily point of control and naked daily VWAP, that's going to be bad news for gold. You really want to start shorting once you get down there, right? And you'll be bringing this bad boy down to about the 2.236 fib at about 36.50 potentially. Okay, now 2.618, you kind of saw what was going on there. Now we've got our, back test here, blah, blah, blah. And then if you get down to this naked daily VWAP and this naked point of control, you can start thinking about longs. But just remember, you also have this secondary entry if you bounce from the 2.618 fib, all right? Now, the last couple of things, if you come down here and you back test the bottom end of the parabolic parallel and the 2.236, you could be longing, but again, you come up here to the all-time highs, you could see resistance, and you might want to start thinking about shorting if you get a bear div and a swing failure pattern at the all-time highs, and that there's also a value area high up there. Now you get to this 2.618, you lose it, you got to start thinking about shorting at least to the bottom end of the parallel and the 2.236 Fibonacci. All right, so that is what I'm seeing inside of the gold markets. And actually, one quick thing, I want to show you the base case that I am seeing for a potential $5,000 gold. Okay, so as you can see, we have, give me one second. We had a nice cup and handle, right, that could bring us up to at least the all-time highs, maybe $4,500, okay? But if you look at the one-day symmetrical triangle, when we broke out, you have to measure it from the bottom end to the top end. And the measured move brings us to, you guessed it, $5,000. Now, what else brings us to that $5,000? Well, we're inside of this nice parallel, as you can see, from this bottom to this bottom, from this top to this top, and we just barely front ran it. If we go back up there, you're looking at about a $5,000 gold by the end of January. And if we get outside of it, you're going to see a $5,000 gold at this first deviation zone before the end of the year, as you can see. So that is my base case for gold. Those are the things that we need to see in order to see gold going up there. So let's answer some questions really quickly, and then we will, let everybody get off of here and get back to their day. So the first question, and this, I'm going to put this as all encompassing. Spanky McDuff 9683 said, define breakout. Gareth might disagree with you, and this was last week. Then SK6 Actual said, I don't see spot breaking the trend line yet, let alone breaking out. So let me explain all of this here in a second. Then Anani Famous 42 said, he should fire him. He said I should be fired. Well, I'm still here, so, we'll see how it's going. And then he also said it's not a breakout. And then John M. Knox said breakout or fake out. So let's answer everybody's question. Let's get into the charts. So as you know, these spot charts, I do not like these as much, okay? And this is how I called the breakout before anyone else, okay? So when we look at the futures charts, now remember, this is a globally regulated futures market on the COMEX. There's only one chart for this, right? We had already broken out there, okay? We had already broken out on that date, and then guess what we did? We came up, we confirmed, we back tested it and bounced, and now we had our confirmed breakout. So if you had listened to me back then, whenever I was talking about the futures breaking out and not worrying so much about the spot chart, which was here at that same time, right? You would have actually already been in the longs and wildly profitable because you're looking at the largest market in the entire world, which is the futures market, and you actually front ran the breakout on the spot market. So that is why I always look at the futures charts, because they will absolutely tell you the tale of the tape. So that is why futures and the COMEX charts matter so much more, at least in my opinion. Now, secondarily, Annette Conan 8966 says, are there risks to paper gold like GLD? So I always trade inside of the regulated markets, whether it's Forex, trading XAU USD or XAG USD, which is silver, or just trading in the futures markets. But you know, if you want to trade GLD, just make sure that whatever paper instrument you're trading is backed by physical gold. Okay, GLD is backed by physical gold, so I see no problems with that. But some of these more off-brand things, like whenever you're trading inside of crypto and stuff like that, the markets will be a little less liquid. And if you want the most liquid market in the entire world, just trade inside of the futures markets. And now Wes Arnett said, do you give out trades inside of the smart money commodity and miner service with verified investing? I was a little unclear where your trade alerts are. Absolutely, that is where the majority of the trade alerts are for me. I still give out trades here, obviously, but yeah, we're up 20% almost on our silver position, which is insane, and we're up almost 6% on the gold position. Obviously, you get different trades inside of there. So if that is something that is interesting to you, just click the link in the description and you can get into smart money commodities. So with that being said, I appreciate everybody so much for showing up. Thank you. Seriously, we would not have a platform without you. We will be back next week for FOMC week and the Golden Nugget at 12:30 Eastern Standard Time. Everybody have a wonderful week, and I hope you had a good holiday weekend this past week. See you later.
Imagine waking up every day with freedom. No boss, no clock, just you, your charts, and profit stacking. That is the life of a verified pro trader, and it's exactly how I built mine, by learning to trade gold the right way. I've helped countless members start winning, and now it's your turn. This is your golden opportunity to trade like a pro, live like a boss, and take advantage of the gold super cycle that is transferring wealth like we've never witnessed before. So make this your golden opportunity.